All right, so episode 9 for the podcast, right? So what we're going to talk about is correlation on pairs, on why the reason why they correlate together, why they don't correlate. We want to talk about also like on major pairs, exotic and minor, and knowing the difference between those. So I want to ask you, what is your favorite pair that you like to correlate with?
Um, if I like using like let's say GN.
No, we want to talk about like the major pairs, like EU, the USD,
Oh, gotcha,
the yen
gotcha,
pairs. Yeah,
gotcha. So yen pairs definitely because they move. So like using let's say yen pairs with gold. You know what I'm saying? Or USD. Like if I'm looking at USD pairs, seeing the correlation with like you said, EU. You know what
yeah,
I mean EU. That's one of my ones that I hate though because it moves so
yeah,
slow. It
yeah.
moves
It
so slow.
does. I feel like AUD USD moves really really slow.
It does.
Some people like to trade it. That's one of not my favorite pairs. I will never give out. I will never mark up a chart on AUD USD ever, never. It's just too boring, Like I like really, to me, I like really exotic pairs like GN, um, a lot of the cross pairs. So like the British pound versus the Canadian dollar, like all of the cross pairs that do not involve with USD, because they just move,
Right.
and when they move, you could flip an account from a small account using the proper lot size and catch like 100, 150 pips, and good. That's a good ROI on it. So
Well, one of my first ones that I loved was, of course, GU. But whenever I'm looking at GU, of course, I'm also looking for the correlation with EU
yeah,
because they should be moving fairly the same way. I know EU is going to be lagging a bit, but that gives me the opportunity to say if I missed a GU entry,
Yeah.
let me go back to EU
yeah,
and let me see if I could catch that same move. Kind of like going back to the future, so to say. You already know where it's kind of going if you see where GU's going.
yeah,
The unfortunate side for me is that I've noticed, though, because of the expanded market over at least the past year, that some of these things like tend to move on their own at certain times.
yeah,
So you might not catch a GU EU correlated move, just depending on kind of what's going on, especially with the UK and the GBP and everything
Yeah.
having Brexit going along.
yeah.
Brexit
With
has
a lot of all the fundamental news, so that plays a role as well. So, but the one thing about that when we're having a lot of fundamental news, especially on the major pairs, right? So yeah, we let it happen, allow the market to break out. But the most important thing is that we want the market to come back into structure, which it always does. So like I know, for example, we had NZD USD broke out completely, and I knew why it did break out, just not just due to the news, but it did come down, open up with a gap, and it's refilling back into structure. So, and then continuously, it's just gonna keep moving in the direction of the overall trend of the picture. So,
right. I was actually looking at that tonight, and someone had brought up on the call. They were like, "Yeah, I was looking at NZD news," and I was like, "Yeah, I bet that it was weak. I
Yeah.
bet the news was weak because I looked at Forex Factory. Of course, it had details, level of diffusion, etc.
yeah,
But I was like, even forgetting all that, looking at NZD over the past couple of days and knowing that EN was going up, I could expect that NU was going to be going down.
yeah,
And kind of looking at DXY, how that correlates with with everything because it's the U.S. index. I saw that it'd been going up for the past couple of days. That also another confirmation. Boom,
Yeah.
and you should be going down. One thing that I do like about correlation with USD is that being that it's one of the two most traded pairs out of the
Yeah.
euro and the USD. The USD exotic pairs, like one of my favorite ones, is UZAR.
yeah.
UZAR
Yeah, that
moves.
pair moves.
I love it. I love trading
It's
that
one of like the most sleeping pair. False technical is pretty well to the T. But once New York session opens up, so like a lot of people would trade it during like London, right? So when you're trading it during New York, it becomes so volatile, like, and you gotta really watch for like the entry points, because the reason why like majority of these like so these cross pairs or exotic pairs is because it's not enough volume within those pairs. So their spread becomes so high, and especially if you get those swamp fees, get those charges on that trade for holding on or even using a bigger lot. People like want to stay away because they're like, no, like the spread is way too high. It's too expensive, just due to the low volume of it being traded.
Right. If you've got the patience for it.
Yeah.
And I mean, you've like, especially when you're talking about what peso, if you can have the ability to stay calm a little bit, because that thing can move, and plus the spread is fairly high majority of the time. Those pairs tend to, like, as far as those two go, like those two are. I've always loved those. I mean, you put me on to peso a long time ago. Yeah. But looking at and kind of studying UZAR and kind of how being exotic, they kind of correlate a little bit with each other. Their patterns are differently, but you can always expect, because USD is involved with it, kind of like what it's going to end up doing. Yeah. UZAR itself, when it gives me patterns, I'm looking at that thing and I'm like, these patterns are extremely clear. That's one reason why I love it. So, yeah. I mean, I caught a head and shoulders on it one time from the top of the head to the bottom of the right shoulder, and I was like, that was so clean, When sometimes when you're looking at those, Forex cross pairs, major pairs, sometimes you can't necessarily catch those a little bit, even though it's got USD within it, So,
no, you could catch them, but the entry point has to be really crucial. Right. Like you're gonna have to trade just like how the banks are, and getting those entries, which I'm actually gonna show you later on, and you're gonna be like, oh okay, like, but getting those following where, like, the bigger picture, the higher time frames, that is definitely going to paint like the whole picture. So and then breaking it down to each time frame and then executing it, finding a good entry, then you could be comfortable writing it because you know what the bigger picture is leading to. So I could definitely talk about like the correlated pairs that I love to get involved with. I like trading, like, especially with GU and USD CHF. Like, those are the two pairs that, I probably do not need to even look at the chart and be like, all right, I know where this pair is going. I'm going to know what this other pair is going to be doing. So, and I just give it out. And I used to be like that and just trade in blindly. And I'm like, all right, let me see what the DXY is showing us, like if we're seeing any strength to the dollar, or is it being weak, right? So if I'm seeing the DXY, then X dollar being weak, then I'm like, all right, so we're buying, the British pound, and I'm buying GU, and then I'm going to be selling USD CHF, and it will be golden, and then I would just set my TPs to wherever, and call it a day.
So, being self-taught. Yeah. What would you say would be a time frame that you gave yourself where you actually started noticing that these pairs correlated with or against each other?
You saying like the time frame?
Yeah, did it click pretty fast for you, or did it take some time where like a light bulb went off and you're like, hey, this is working?
It clicked pretty fast when, because like I would like to have like two charts. So I have GU and then I'll have USD CHF in another tab, because I didn't know that you could able to get the trading view and upgrade the whole account. So I know people know what I'm talking about. If you are using TradingView, I know probably you guys will have like multiple tabs of different pairs. You just click in, try to see which one that you could actually get your hands on. So immediately it was like the 15-minute time frame. Like I was seeing a difference, seeing how the British pound was becoming strong, the US dollar was becoming weak. But that was just like common sense to me. Okay. But like I wanted to find out what is the reason why. So and then that's when fundamentals start to kick in, looking at what is what is the UK's economy looking like, like is there any like kind of like dramatic news that happened with Brexit, so like people like to know like what caused it to move, like 200, 150 pips. So and I just stuck to it. And then I was like, all right. So then the major pairs that actually move with GU, like EU, AUD, USD, which is very slow, like I mentioned before. Um, what else? Gold at times. So like, yeah, I used to just focus on those pairs, and then that's when I started to branch off to other pairs, and I was like, all right. And then we keep challenging my skill set, and then we tap into all different pairs that I've never tried. We both experienced, USD versus, try the Libra.
Yeah.
Very volatile pair. Trading with the peso, which I wanted to trade pairs that no one wanted to trade.
Right.
Especially the volatile pairs that everyone just stayed away from. So,
Well, it's funny you're talking about pairs that nobody wants to trade.
Yeah.
What was it, that one London session? It was me, you, and one other person.
mm-hmm.
And I was like, well, London's kind of moving slow. Let's take it. I was just starting to go into some exotic pairs. I'm like, let's look at USD and the Chinese yuan. Let's look at
Yeah.
USD and the Hong Kong dollar
Yeah.
and stuff like that. So, I mean, kind of seeing those, like, it was weird. It was majority of those exotic pairs outside of UZAR or outside of Turkish lira or peso, a lot of those pairs moved exactly the same.
Yeah, like a lot of those exotic
know?
pairs, they move exactly.
Yeah.
Like sometimes it could be even identical at times too. And that surprises like a lot of people because sometimes it does the complete opposite. Just due to having less volume of those pairs being traded, just the spread being just outrageous. So, and you don't even need to throw in like crazy lot sizes for those pairs. That's the most funniest thing. So if you're catching like, a good 200 pips on it, and, you're getting a good return on that trade.
So this is actually going to be a learning moment for me. When you're looking at correlated pairs, we can see that the movement happens. So like, okay, we're expecting GU, if it's going down, we might expect EU to go down. So it's like an overall movement, right? Are you able to actually tell if you can catch similar amount of pips overall? Like, would you say, well, GU went down 200 pips, so EU is going to go down 200 pips, or something like that, to where the actual pip count correlates as well as not just the movement?
No, not really. Like the chances of that is that if you're setting your TPs for a certain amount of pips that you want to collect.
Okay.
So if you're looking at GU, you're looking for your TP1 to be 20 pips, TP2 40, then TP3 could be 60 or even 80, and then you do the exact same thing. So you have a certain amount of pips that you're looking at, what you want to secure, and that's that. Because some people like to vary it, looking at either previous low high on closing it, probably trade it long. So like depending on how the pair is moving.
Right.
So if it's hitting your target areas, then on the certain pips that you want to collect, then it's just going to be very simple. So
Yeah, that's why I was asking, because we'll see pullbacks, retests and whatnot differently on each chart.
yeah.
So, I mean, utilizing those as, past pullbacks to use for future take profits. I was just kind of wondering overall, like, because those are different, is there any way that they could actually correlate pip count wise? But definitely, I mean, I can see where you're coming from with, just setting the same take profits. If you're going to do 40 pips on one, do 40 pips on the other, either way. So that makes a lot of sense.
Yeah, it's true. So like, each pair, even though like they do correlate, but, do move, a little differently. Probably EU probably might be having, a little head start before, loan session opens up. That's when it starts to just become volatile. So like, all really depends. So as long as that you're securing, you have a game plan on what you want to secure, and then everything just sets itself. So,
And I think one thing to consider as well is a lot of the correlation, like we're just talking about how it's not the same market it was a year ago, 2 years ago, 3 years ago, right? It's a little different. So many more people that are involved in this, that when London session happens or New York session happens or even news happens, trades kind of tend to work a little against each other where they could normally move together.
yeah.
So I think one thing to consider when looking at correlation is, are we looking at a market structure movement overall? Is it a light news day, or is there news but it's just weak news, green folders, or what is it, yellow folders, right? So low impacting folders. So if it's one of those type of situations, then yeah, we should definitely see correlation where those pairs that should correlate with each other will correlate with each other and should be similar movements. But I think now because of how many people are involved in this and how we talked about emotion so much, I kind of tend to feel like the Forex market is becoming a little bit like the stock market now, where a lot of it's based on emotion now. People tend to get in and get out of trades a little differently now.
Yeah, like when you have a lot of like, a lot of buyers, trying to push, and you got a lot of sellers.
Well, I hope they're all right.
Nah, it sounded like someone fell, but really? Oh. Well, welcome to AZ, right?
Right.
Yeah. So, geez, I just lost track of what I was gonna say.
We were talking about news and
news. Yeah.
basic
So
market
like
structure.
you got a lot of people that's buying and selling. There's a lot of pressure. But at the end of the day, it's gonna follow market structure no matter what happens. So yeah,
Right.
we might have some crazy break, due to a company being involved, or if it's like with the euro, having like very volatile news or having low impact news, like anything could trigger it to give it momentum, but it's always going to come back to market structure.
Right. Well, and you taught me that from day one. Was news is there and it may cause certain pushes, but it doesn't change the overall structure.
No.
Right. So I've always kept that in the back of my mind. The only thing that it can change structure for me is the indice pairs.
Yeah, and what I'm actually going to drop a golden nugget too. What market structure? There's 3 phases that it does in the market, and it does it all damn long, every single day. It's either ranging, breaking out, coming back into the entry, trading it. It does the exact same thing every single time. And there's a lot of retail traders, depending on what strategies that they have, like they say, like 95% of the people are retail traders and are consistently losing when it comes to trading because they're not following on the 3 phases of how the market is moving. So like they're not finding or identifying where is the range, where is their breakout, to get a better entry. So, and then causes your stop profit to get hit, and then you're like, damn, like you start questioning yourself, like, was this news? You start like, what did happen? And then you're like, this is what's supposed to happen, but your entry was just way too early,
Right.
So there are times that where market could come out of place, but and if you have like a tight stop, just get out of it and just reflect. That's all you could do, because regardless, the market's still going to be moving.
Right.
The money is still going to be getting pushed. Sellers are still going to be putting pressure. Buyers are still going to be buying in for a better opportunity. And that's how the market just keeps going.
Well, that's where it ties in a lot of the topics that we've already talked about.
Yeah.
The patience, the emotions, and then the revenge trading, stuff like that. It all goes all within that same mindset. So like you said, if you get in early, you have a tight stop, get out.
Yeah.
Just wait, be patient, get back in. When you see the right time, let it do its thing.
Yeah.
Don't like we've said many times, don't try to beat the market. Just
Try
try to take a
beat the market.
Just take a little bit away from it.
You could trade alongside with the market, but you're never going to beat the market.
Exactly.
So so that's why a lot of people, you don't want to make it complicated. Just make it as simple as possible. Find the pairs that you love to correlate with, stick to them, master them, see how they move consistently, back test, whatever that you have to do. If you have to probably do this, probably observe from London session all the way to New York and not trade a damn pair. See how everything plays out.
Yeah, facts.
I've done that like multiple times, and I just watched and did not place a trade. And a lot of people in the outside world will probably say like, that's weird, isn't? aren't you supposed to be up to be making money? I'm like, yeah, but I'm also learning at the same time too.
Right. Well, and I mean, every day is a learning day.
Yeah.
Something new that's going to pop up, either a new part of strategy or with something that just wasn't noticed beforehand, whatever it may be. So
Yeah.
that's just growing within the market, and the market changes all the time. You know, the evolution of the market just in 13, 14 months now. It's been crazy just to kind of see what I had missed out on for multiple years. So it'd be interesting to have seen, you know, if I were in this 4 or 5 years ago, what it would be like today, because I can see that it's changed so much over the past year. I can only imagine what you've seen, you know. So being able to continually stay up on that, understand those fundamentals, the market structure, everything like that,
Yeah.
and then kind of keeping in the back of your mind that correlation, I think all tends to go into making a good trader overall.
Yeah, and those are very strong components to have. Like, honestly, it's like no matter how long you put into this, like you're still gonna keep learning. You're gonna still keep sharpening. It's just to keep sharpening your skill set,
Right.
you know. So
how much weight into a trade do you put into correlation? Like, do you have it as a confirmation, or is it just something that just kind of?
no, not really.
No.
Like if I'm focusing, like usually, like if I'm looking at all like the British pound pairs, I want to see which pair is gonna be moving. I like to see it coming out of a range, and then breaking out, and then seeing where the past rejection that occurred to get like a good entry, but not really like focusing on just like, oh, so I'm trading this, I'm gonna have to be trading that. Like, you know, I don't focus on just focusing on trading like the correlated pairs. I just like to focus on which pair that's gonna be moving, and I know that I could secure a big bag on, and then call it a day.
Gotcha. One thing that's kind of helped me out, and shout out to TradingView for the tool, the compare tool. I think is pretty awesome.
Yeah.
That gives you a great opportunity to see on one page if you're just literally focusing on one chart and you're like, hey, let me just go through these different type of pairs to see how they move either with or against each other. So for anybody that's not using that compare tool, use it. It's very, very helpful. I've used it quite a bit. I've used it on calls to actually show people, look, if this is going this way, you can see where, you know, highs on one are lows on the other. You know, so I think that's
Yeah, especially on the yen
cool tool.
pairs, using the bar pattern tool, because I tend to see a lot of the yen pairs repeating its pattern. So that's kind of like a good tool that you want to use like on your trading view as well. Completely optional. It's like you don't need you just want to see like, you know, how like candle structure is being formed and stuff like that. So something to play around with. But yeah, it's kind of like really can't really go more into depth about correlation on pairs.
Right.
It's just very simple. It's not really too hard to not grasp on the knowledge behind it. So, so you focus on the major pair. You trading the USD pair. If it's EU's going up, you're selling any USD pair. You know, but EU really correlates with USD CHF. So if you're seeing it going up, you're going to be shorting USD CHF. And that's a lot of like common knowledge for like new traders. Because like I know a lot of people always ask like, oh, what is the pair? I would tell them GJ, but you know, focusing on like kind of like on a slow pair like EU and then USD CHF, both identical, move in a complete different direction. So
facts. In fact, it's kind of funny. Last time I looked at UCHF, it moves exactly with the DXY, like closest to any of those USD pairs. So I would challenge everybody, you know, if you're looking at and you use the US index, you know, like I use it as my blueprint. So I'll usually kind of start out with that. Where's USD going? Throw that compare tool with USD CHF and watch how identical it moves, like right with it.
Yeah.
And then if you remove USD CHF and you throw EU on there, like you're talking about, it's like literally the complete opposite. It's so perfect. It's crazy. It's crazy. So I think that's a great beginner's type of opportunity to see how correlation works.
Yeah, that's very facts. But yeah, that really kind of like really sums it up on correlation. So I know we kind of gave you guys what kind of like the pairs that correlate, tools for TradingView that you guys could probably use if that helps you out. And yeah, so I think episode 10. Wow, we really got to episode 10 already.
10. That's crazy.
So yeah, so we definitely gonna have to find a really good topic to discuss, so everyone can enjoy in continuation of this podcast. And just like Derek's shirt, I create content. So you have any last words before you wrap this up?
I'm good. I just, I hope people can, utilize this podcast as far as like answering any questions they have. Like, if they're just starting out, saying, "Hey, how can I, how do these kind of move with or against each other?" Maybe this will help.
Yeah.
Start with, like you said, those tools and whatnot. So, yeah, I just hope people find value in it and utilize it.
All right, awesome. All right, so stay tuned to episode 10. Hope you guys enjoy it. Have a good one.
Adios, guys.